Did you know that over 40% of Americans don't have enough savings to cover a $400 emergency? And it gets worse. Most of them are missing out on one of the most powerful ways to secure their future: investing. If you've ever wondered how to break the cycle of living paycheck to paycheck, you're in the right place. Today, we're diving into the best strategies to grow your wealth, even if you're starting from scratch. So, let's say you've been working hard, saving what you can, but your account just doesn't seem to grow. Why is that? Well, here's the secret. You've been doing it wrong. And I'm not just talking about picking the right stocks or choosing the hottest mutual funds. I'm talking about building wealth with the right strategies from the start. Because without a plan, that hard-earned money of yours isn't working as hard as it could be. This isn't your typical investing advice. I'm going to walk you through the exact steps to get your money to work for you and do it in a way that's smart, safe, and sustainable. Let's get into it. First things first, investing is a long game. It's not about making a quick buck. It's about making your money grow steadily over time. Think of it like planting a tree. You won't see much at first, but with patience and care, it'll start to bear fruit. Now let's talk about how you can plant that tree. How you can watch it grow, and most importantly, how you can reap the rewards. Step 1. Start early and automate. Time is your best friend when it comes to investing. The earlier you start, the more time your money has to grow. But if you're sitting there thinking, I'm too late, don't worry. Even starting in your 30s or 40s can make a huge difference, especially if you're disciplined about it. Here's how to get started. Open a brokerage account, even if it's just with $100. That's it. Don't worry about being perfect, just start. The key is consistency. Use automation. Set up a monthly transfer, just like paying a bill, into your investment account. Even if it's $50 a month, over time, that will compound. Step 2. Diversify, diversify, diversify. One of the biggest mistakes beginner investors make is putting all their eggs in one basket. Think of it this way: if you only own one stock, you're putting all your faith in that one company's success. But if that stock drops or goes under, you're in trouble. Instead, diversify. This doesn't just mean owning a bunch of different stocks. It means spreading your money across different asset classes: stocks, bonds, real estate, commodities. Here's a pro tip. Low-cost index funds or exchange-traded funds, ETFs, are perfect for beginners. These funds track entire markets like the S&P 500, so you're automatically diversified without having to pick individual stocks. It's like buying a little piece of the entire economy. Step 3. Understand risk and reward. You've probably heard the phrase, no risk, no reward. Well, that's partially true. But the reality is, different types of investments come with different levels of risk. If you're just starting out, keep it simple. Stocks and bonds. Bonds are less risky but offer lower returns. Stocks, on the other hand, are riskier but have much higher potential rewards. The key is balance. A good rule of thumb is the 100 minus your age rule for stock allocation. For example, if you're 30 years old, you might want to keep 70% of your investments in stocks and 30% in bonds. This gives you growth potential while also reducing risk over time. Step 4. The power of compound interest. Let me hit you with a quick example. Let's say you invest $100 a month, every month, for 20 years. At an average return of 7% per year, your $100 monthly investment could grow to nearly $60,000. That's the power of compound interest. It's the idea that your money doesn't just grow on its own, it grows on the money you already made. So the longer you wait to start, the longer you miss out on this magic. Take Emma, for example. She started investing in her 20s, contributing just $200 a month. Fast forward 20 years, and with consistent growth and reinvested dividends, she's sitting on a portfolio worth over $200,000. That's real wealth built over time. Step 5. Stay the course. Investing isn't about picking the next hot stock. It's about staying the course. The stock market has its ups and downs, but as long as you stay invested, you'll come out ahead. Remember 2008? The market tanked, but people who stayed invested came out stronger. This isn't a race, it's a marathon. That's why rebalancing your portfolio is so important. Over time, some of your investments will grow faster than others, throwing off your balance. Rebalancing means selling a little bit of what's grown and buying more of what hasn't, so you stay on track to meet your long-term goals. Step 6. Get educated and seek help. Investing isn't something you just do because someone told you to. It's something you need to understand. Take the time to learn about the stock market, bond markets, ETFs, and different investment strategies. There are countless free resources, blogs, podcasts, YouTube channels. Use them. But here's the thing, you don't have to do this alone. If you're overwhelmed, seek out a certified financial planner, CFP, or a professional who can help you create a personalized strategy based on your goals. Everyone's financial situation is different, and a pro can help you avoid costly mistakes. The takeaway, investing doesn't have to be scary. It's not about making big moves, but about making smart, consistent moves over time. Start early, diversify, understand risk, and use the power of compound interest to your advantage. Most importantly, stay the course and trust the process. Before you go, let me know, what's your biggest challenge when it comes to investing? Drop a comment below. I'm always here to help. And hey, if you found this helpful, hit that like button so we can keep sharing more ways to grow your wealth. This content is for educational purposes only and not financial advice. Always consult a certified financial professional for personalized guidance. If you like this video, you'll love the next one. Click on screen to dive deeper into smart ways to save and grow your money. See you there.